Muni bond yields have been or I should say munis broadly have been underperforming treasuries recently, which is a little bit atypical. But my next guest sees a buying opportunity in the coming weeks, thanks to the start of the rate cut cycle. Craig Brendan is co-head of munis at Morgan Stanley Investment Management. It's great to have you here.
Hi, Kelly. Nice to be here.
Connect some dots for us. What's going to happen as a result of this big cut, and what could be to come?
Right. So munis have moved a lot in the past 6 months. If you look 6 months ago, we were very rich to treasuries and some other asset classes, and we've backed up a lot. And I think what could happen in this rate cycle move is that maybe munis do get a little bit cheaper to treasuries, which we see as a buying opportunity going into the end of the year. There's also a lot of technicals going on right now, ton of supply, right? Our supply numbers are at a record.
Really?
Year to date. I think because the last couple of years, municipalities had so much COVID money, they didn't issue a lot of bonds. So this is sort of a catch-up year for the last couple of years of issuing less. And I think that people are trying to issue before the election. So I think the time to buy is sort of the next couple months, because I think maybe once we get to the election, things slow down.
Do you see any interest from people who are worried about tax rates going up in the next couple of years?
It is the conversation that everybody's having right now, because I think that this election, with taxes, with Tax Cuts and Jobs Act expiring at the end of 25, it's the most important topic, I think, right now. And for munis, the two candidates couldn't be more different on what they want to do at the end of 25. So we get these questions all the time, because the impact on the muni market, I think, will be very different depending on which candidate wins.
Sure, because it will alter demand considerably.
Considerably.
What about the drop in rates, kind of broadly speaking? Is that something that you think could kind of push people on the margin towards looking elsewhere in terms of asset classes?
I think that, like I said, munis have backed up versus treasuries. I think if they back up a little bit more, we become more attractive versus some other asset classes. I would say that, listen, in the past few months, go back to March, April, May, June, we were not all that attractive, and we still had pretty solid flows into the asset class. So I think usually what a rate cut triggers is flows into the asset class, because munis are about as pure a duration as you can get. We're a high-quality duration asset class. So what happens is when the Fed is raising rates, people sell munis because they're afraid of high-quality duration.
As we saw, yep.
And traditionally what happens when rates are going down is that's when the money comes back in. So maybe there's a little bit less look at relative value of munis, and maybe more of a just pure duration play that people want to take.
It's a hard question to answer in 10 seconds, but for people in high-tax jurisdictions who are thinking about this, what kind of muni bonds should they own?
High-quality muni bonds are really pretty attractive right now. High yield is more the trend play, right? There's so much demand for high-yield munis right now, and there's just not a lot of issuance. So the technicals in high yield are really, really strong right now. That's more of a trend trade. If you really want to jump on that trend for the long term, I think that high-quality munis are great.
Just stick with high quality.
Yeah.
All right. Well, that's easy. Craig, thanks so much.